What's up, everyone? This is Jack. This is going to be a quick trade review for the S&P 500 futures contract for today, Tuesday, July 21st. Just a quick couple of easy trades I wanted to go over. And there was a question somebody asked that I wanted to go over as well. I just spent the last 3 weeks doing some research and building some systems, and today's the first day implementing the system, so I wanted to track my trades and just kind of go over them a little bit. It's really nothing impressive. It's not anything really to celebrate. It's nothing crazy, but just figured I would do it to kind of get back in the groove of doing stuff. So hopefully you can see okay, and the bars are big enough. We have a big gap up on the day. You know what? Let me talk about the daily chart, because I haven't done a video for a while. So the daily chart has been in a triangle for a while, and then Monday we got a big gap down, but a bull bar and a doji. There are likely buyers down here. You can see we're holding above the slower moving average. We have an obvious triangle. We tried to break out. We failed. We're pulling back. But we have a couple of swing lows right here, and we're finding buyers. Yesterday, we gapped up big time, was sold off, and tested near the low of the prior day. And now today, we have a big gap up. So probably what's going to happen is two things. Either we're going to sell off and retest down here, or we're going to sell off and rally, or we're just going to rally. I mean, that's all that can happen. Or we can go just mostly sideways. We can go a little up. We can go a little down. It's just helpful to think about the possibilities of what can happen today. What makes the most sense? Well, we're always in long on the higher time frames, including the daily chart. You know, you could say we're probably back to always in long here. We were always in long here, temporarily short there. I don't think that this is enough to make the market short here. So we're probably always in long here. And we are also long on the weekly charts and the monthly chart. You can see the monthly chart here. You can see the weekly chart here. We're always in long, right? So that was kind of what I thought coming into the day. Very likely that we'll find buyers down here. We might pull back for another day or so. We might even break below these lows, but probably we're going to find buyers below these swing points right here. So that's what I was thinking would happen today. So back to the 5-minute chart. I had a very lazy morning. That's also another reason why I wanted to stop trading early, because I can tell that I'm just not totally focused today. I'm kind of like thinking about wanting to do other stuff. I can tell that I'm not, as centered as I would like to be, which is fine. I'm centered enough to take a couple of trades, but I can tell that it would be pretty easy for me to get a little antsy and just kind of start making mistakes. And that's not what I want to do. I want to practice good execution, following my systems, blah, blah, blah. So I get to the desk around bar 11, bar 12. We have a big bar on 12. So to me, I see this as an opening sell-off. We have two legs down. It's likely that this leg is part of a trading range, and that's because we're always in long. And any counter trend move against a trend is a trading range by definition. So this is two legs down in a trading range, and if it is a trading range, we'll find buyers somewhere near the low of the range. But the low of the range could be all the way down here, or it could be right here. And we start to reverse up with 4 and 5. But so far it looks like a pullback, and technically the bears did get a second leg down right here, a third leg down, 1, pullback 2, pullback on 4, retesting the lows on 5. So it's 3 legs down. Now, if this is a trading range, and this is the third push down, it's very likely that we will find buyers and start to rally and test all the way back up here. We're also not that far from the Globex high, this green line. So it's likely that we'll get there. But if this is going to be another one of the days like yesterday, where we sell off for most of the day, then it's probably likely we'll find sellers up here, get a new low below 4, and maybe even retest all the way down to the close of the prior day. But we start to rally, and it does look weak. It looks like a leg in a trading range. There's problems. I like to say that problems I like to say that there are problems, which is just a euphemism to say that there's a lot of overlap, tails, bad follow through, but we do have 4 consecutive bull bars, very likely buyers below, second leg up. And then here's the second leg up on bar 9. And then as strong as bar 9 is and as weak as bar 8, the reversal bar is, it's very likely that whoever sold down here is getting trapped and they're going to be buying back their shorts. We're probably going to go higher. So it's probably reasonable to think about buying here. Probably better to buy a pullback because of all the overlap. We're probably always in long. We could be always in short, but this is evidence against that. And now we're reversing up from below 8, so probably going higher. Probably buyers at and below 9. We have an expanding triangle, 2 outside bars, buyers below 9, and then another strong bull bar on 10. Bears really don't have much going for them, so we're probably going to go higher. So then we get bar 12. What leg is bar 12? Bar 12 to me is leg 3 or leg 4, because we have leg 1, pullback, leg 2 on bar 9, possibly leg 3 on bar 10. We went below 9, reversed up. Then we had a pause on 11. Now we have another leg on 12. So this is a late leg. Are we in a trend or a trading range? You could argue that we're in both, but I would say that on this time frame, we are mostly in trend. We are in a bull trend. We've been in a bull trend since bar 4. You could say that the whole thing is a trading range, and you would be correct. But with this immediate context, this is a trend. Most trading ranges do not have 4 consecutive legs in the same direction. Most trading ranges have 2 or 3 legs in one direction, and then they reverse. So if we are in a trading range, it's very likely that we will find sellers at the close and above 12, and we'll test down to the bottom of the range. But if this is a trend, if we do sell off, we will find buyers at and below 12. And for me, for my system, it's actually okay for me to buy the close of a bar like 12, even though it's a late leg like leg 3 or leg 4, because we're in a trend. The way that I'm looking at the market today, I see this as a trend. So I buy the close of bar 12 right here. And this arrow signifies that it is a low probability long. And it's only low probability because it's a high probability that we're going to pull back. And there's actually a better entry, which is a pullback. But I buy the close of bar 12 because from my system research, I know that one of the best, actually the best entry method for a late leg, like leg 3 or beyond, in a trend is actually to buy the close of the first bar of that leg. And that's what bar 12 is. And you can see initially we went high, we went higher, but we did not go high enough to make a scalper's profit. So I held. And now we're getting a pullback with bar 13, very likely to go sideways to down, very likely buyers anywhere in the range of 12. Probably better to think about buying below 12 if possible. So I hold long with that expectation in mind, and I have a stop down here, a wide stop. So that's kind of the idea of the trade thesis. I have one long entry buying the close of 12, and I reserve a second entry to scale in during a pullback. Then we get bar 14. It's a pretty good looking bear breakout bar. Now, what phase of the market cycle are we in right now with bar 14? With bar 14, for the bears, we're in a trading range. We're not in a bear trend. And for the bulls, we're still in a bull trend. We still have higher lows. So there's very likely buyers at and below 14, probably buyers below 12, probably buyers in the range of this pullback right here on 11, because we're making higher lows. And that's what happens in trends. So I'm still holding long, and I'm looking to buy below 12. Then we get below 12 and I buy more. We tested near the moving average. By the way, I changed my moving averages. I'm using a 10-period moving average for the fast and a 60-period moving average for the slow, both EMAs. And the color changes based on the number of closes above or below the moving average. So I scale in one time below 12. We reverse up. It's very likely that 14 will get a second leg down, so I take profits above 12. I'm sorry, above 15. So you can see that we did make a new high. I could have held, but it doesn't matter because we pulled back a little bit deeper than I actually thought we would. But because we pulled back that deep, it was it really fit the thesis, really fit my read of the market. So I got long there anyway, and I got out here. Now we have 15 and 16. We are still in a trend, but we may start to be, we may be developing a trading range right now. So it's very likely that we'll pull back after 16, even if we get another bar up. Very likely it will pull back soon, and I'm thinking about buying somewhere below 16, ideally around the low close of 14 or below the 14 low, because I expect to pull back into this area. So I'm waiting, and then here we start to pull back with 17 and 18, and I did have a limit order to buy at the close of 14, but I pulled it because this bar started to go down with some momentum, and I expected it to go a little bit further. So I was looking for an entry below the low of 14, but I did not get filled. When it reversed back up, I thought it was reasonable to take an initial entry here and then look to buy somewhere below 18 if it turned down again for a second leg down. Now for the bears, this could be leg 2 of their trading range, or it could be another leg 1. We have a new high right here. The leg count for the bears may have been reset, but at a minimum, it's leg 1, possibly leg 2. So it's reasonable to start fading this counter trend move. And so I'm looking to buy somewhere below 18 if we go lower. If we make a new high, I'd be interested in scalping out, because that would be a pretty good risk reward for this opportunity here. And again, I'm trading a half position here with a wide stop, looking to scale in one time if available. And I know from my studies that it is actually very good to look for that pullback entry rather than buying the close. Another reason why I wanted to stop trading early, because I want to get better with my entries, my pullback entries specifically. So then 19 goes outside down. No surprise, it's a second leg down from 16 and 17. It's also a second leg down from 13 to 15. And because of the tail and the size of this bar, I expect there to be buyers at and below. So I scale in at the close of this bar. I'm also looking at the 100 seconds chart, and it's the third or fourth push down with a climactic last leg. Actually, I can just show you that real quick. So let's look at the 100 seconds chart. Make sure you can see it. Okay. So my initial entry was below 17, I think. Let's see here. No, it was like at the close of 17. So at the close of 17 right here, this is my initial entry right here. Then we break out and pull back on this bar. And that to me is a third push down in its counter trend. So to me, that is a good fade. That is actually the highest probability fade. So that's why I decided to enter here, because I expected this to fail and to get trend resumption. Even if it did go lower, it's very unlikely to lead to a trend. It's much more likely to lead to a trading range, especially after all of this buying pressure. So there are very likely buyers below. So that's why I entered where I entered. I missed my entry at the low close, entered up here, and now I'm entering again here because we initially get some follow through, we reverse, and we get two big climax bars. Now this is a late leg. Now this is at least 1, pullback 2, pullback 3. If this was not leg 3, this certainly is leg 3. So this is a very good opportunity to fade because we're in a trading range. We're always in long. This is the third counter trend leg against a trend, and that is the highest probability fade. So that is why I bought the close of bar 19. Now, if I was wrong and we got another bar, that would probably reset the market cycle. We would have a new breakout. We would have a new event, and it's very likely it would get a pullback, second leg down, and I would be wrong, and I would need to get out. But because that didn't happen, I held, and I got out around the high of bar 19. So anyway, very long-winded way to explain what I did today, but and you know what? Really not that impressive trading. I could have picked my entries better. I could have picked my exits better, obviously. But I just wanted to share the trade review because this is the result of the past several weeks of doing signal research and systematic research. And I encourage everybody to do the same. Then there was a question I wanted to answer. Somebody left on one of my videos. What are second reversals? And you know what they are, but I don't have a solid definition. And how can I build a system around it? Well, first of all, what are second reversals? This is a second reversal. Bar 17. The first reversal was here. We pulled back, retested the highs, and now we have a second reversal down. So this is a second reversal. Theoretically, we have a double top. That is why second reversals work. You could also look at a second reversal as a double bottom, like right here. We have a test down, we went up, we tested down again, and now we went up. That is a second reversal. Theoretically, you buy the close or buy a pullback. And then up here, we have leg one against the trend, and we have a retest of the highs. There's some weakness here, a signal bar for a second reversal, and then the second reversal triggers on the next bar. Theoretically, you're short right here, but then do you hold or get out? Probably reasonable to think about getting out. And then with this bar, I would certainly get out because that's two legs down after a second leg down. So that is what a second reversal is. So that is what I would define as a second reversal. It could be a micro pattern, like a micro double bottom, or it could be a full size pattern made of 6 to 10 bars or something like that. I would not say that this is like one pullback leg two. That is too many bars. That doesn't make sense. I would not say that this is a second reversal from this, because that is a different time frame. Right now we're trading the 5-minute chart. That is not what's happening here. It is, if you look at a 10-minute chart. In fact, let me pull that up. So here's the 10-minute chart. Make the bars bigger. So you could say, on a 10-minute chart or maybe a 15-minute chart, that we have moved down, a pullback, and this is a second reversal from this. But this is a different time frame. Totally different risk parameters. The bars are very different size. It's just, I would not say that this is a second reversal. It needs to be either a couple of bars like a micro pattern right here, or it needs to be, 6 to 10 bars like right here. If you count from over here, 1, 2, 3, 4, 5. This is 5 bars. Here's the signal bar, bar 6, bar 7, and then it fails on bar 8. So that is what I would define as a second reversal. Now, how do you build a system around that? Well, I would say that second reversals can be a good system. I would say it's probably not a good idea to work on a second reversals system if you are asking me what is a second reversal or how to define it, because there's a more basic fundamental system that you should build first before you work on a second reversal system. And that is just a simple trend following breakout system, which is what everybody has to learn first. Everybody has to do that. There are no, well, I don't know. All of the successful traders that I know are trend followers. They also take counter trend trades, but I would argue that they're only able to do that because they have a trend following system and they understand when to take counter trend trades. My logic for buying the close of bar 19 was part of that reason, because it was a late leg. It was leg 3, and that's fading. So anyway, I don't know, I'm kind of rambling, but I would say that you would probably be able to build a second reversal system pretty easily if you first built a breakout system for trading trends and then trading ranges. And they are very similar. There's, leg 1, leg 2, leg 3, and late legs. Like, that's it. So you need to have a trend version of that, and you need to have a trading range version of that. So if we look at this from the opposite side of the market, let's just, for fun, let's look at mirror bars. just to have some variety. So this is today just with the bars reversed. The bear bars of today are bull bars, and the bull bars of today are bear bars. So it's the same chart, just flipped upside down. So, you know, we have a trend right here. We have a trading range. Let's say that we're going to trade leg one in a trading range. All right. Leg one in a trading range. So right here, you can say we have a trend. This might be a trading range. We're breaking below it, reversing up. And then we get this bar. Okay. So what phase of the market cycle is this right here? Well, you could say that maybe it's a trend. It might be a trading range. We're holding above that low. You know, okay, so it could be either, right? It's confusing. That's the market's job. The market's job is to be confusing, so that's okay. And you got to make peace with that. But you can tell we're probably always in short. You know, we did have a strong rally, but look how much it was undone. So we're probably always in short. Okay, so if let's say that we're only going to trade with trend. We might be in a trading range, okay? And we're probably always in short. Okay, great. So we're only going to take shorts. We're only going to trade with trend, and we might be in a trading range. Well, what leg is this? If this is a trading range, this is probably part of leg one. So what if we thought about selling somewhere around the close and selling more higher? Why would we do that? Because we're probably in a trading range. We're probably always in short. This is probably leg one of the trading range. At a minimum, it's leg one for the counter trend trading range. This might just be part of a late leg of a trend, so we might get a deep pullback. And that's common in trading ranges. But we're trading with trend, so you know, how deep could it be? If it fails, it's going to go very far, but odds are it's probably not going to fail entirely. And we'll probably be able to save it with a scale in, and it would actually make a lot of sense to sell above 15. So maybe we sell a pullback to 15. Okay, well, we missed this leg. So we're still flat. We don't have anything going for us. Now we're probably in a trading range. It still could be part of a trend, but we're probably in some sort of trading range. Okay, we're starting to pull back. Let's say that this is leg one of a trading range, and we're always in short. So here's leg two, counter trend to the overall direction, and we're in a trading range. We're not going to fade leg two. We're just going to wait for the second leg to trade short. So maybe you sell above a bar like 17, but I don't know. I think this is strong enough up for a little bit higher. So maybe we sell somewhere above 18. We're looking for that second leg down. And then we get a surprisingly strong bar. And this is leg two in a trading range. It's a counter trend leg. We're always in short. And this is a very deep pullback for leg one of the trading range. So as crazy as it might seem, it's reasonable to sell the close of this bar. And this could also be part of your second reversals system, you know, but the second reversal concept is better thought of as another layer that can be added later to trading with trend in trends and trading ranges, because this is actually a setup for a second reversal. Here's the first reversal down. And we're going to get the second reversal down here. So here's like one of a trading range. We have a deep pullback. We're still always in short. The market might be flipping to long here, but let's just say that we sell the close of 19. And let's say that we're willing to scale in somewhere up here, somewhere above 15, ideally close to a measured move up of bar 19. So we're selling the close of 19. We'll sell more somewhere up here. Okay, great. We're short. Here's the second leg in a trading range. It's with trend. Now we're at the low of the trading range. We're going to close this trade and look for something else to do. Now, if we get a third leg up for the bulls, you can just put this in your back pocket for later. But the third leg against a trend is the highest probability fade. So if we do start to rally, we can look to sell again. But instead, we get a breakout down. So anyways, that's one way to look at second reversals. I don't know. I feel like I'm just kind of yammering now. That's one way to look at second reversals. I think it's a little bit better to build a trend following system that operates in both trends and trading ranges. It's not one system, it's a program. And you know, here's one system. Leg one in a trend with trend. That's a whole system. here's another system. Leg 2 in a trend with trend. That's a different system. Leg 3 or beyond in a trend with trend. That's a third system. Another system is leg 1 in a trading range. I would say to try to trade in the with trend direction, because counter trend trades are much more difficult to trade. And once you can trade with trend successfully, then it'll be much easier for you to understand why some counter trend trades will work. Like technically this counter trend trade did work, here, but then do you sell more on 20 or do you sell above 16? This looks kind of weak. Let's say you're short right there. I mean, how are you feeling now? You're probably feeling kind of silly, right? So it's better to learn how to trade with trend first in a trend or a trading range, then start thinking about second reversals, third reversals, which was basically a wedge. So anyways, that's my advice. I hope that helps. I hope that's clear. I know I'm kind of just going on and on and on about it. So that's all I'll say about it. So anyway, I hope this was helpful. I'll keep trying to do trade reviews, bar by bar reviews, and I'll think about some systematic stuff to post possibly that might be helpful. But if you have any questions, if you like this video, leave a comment, leave a like, subscribe. I'll see you next time. Thanks a lot. Bye.